What's up, everybody? It's Andre Evans, and this is a video going over last week's trading recap. I had a 75% win rate, took only 2 losses that amounted to about $350 and was up over 7R last week. If you're serious about your trading and you really want to become profitable, make sure you watch this full video because it's 100% free and I don't charge for anything. Alright, so starting off this week, this video is recorded raw, so there will be a couple stutters, a couple blemishes, a couple things like that. Just ignore it, pay attention, get something out of the video. But starting off this week on August 3rd, I took a singular trade and it was a A+ setup. If not the best trade of the week, it was the best trade of the week. So looking here, I took a single long from this retracement up here towards my buy side liquidity, and I want to get into exactly why I took this trade, how I took this trade, and how you can take it next time. Alrighty, so this is something you need to be doing every single day. You have to have some kind of narrative or bias going into the day. If you don't have a clue where you think the market is going, you're gambling and you're going to lose money. Alrighty, so how I do mine is I start on the monthly, go to the weekly, go to the daily, go to the 4-hour, go to the 1-hour, and then go all the way back up to make sure I'm getting a clear understanding of what's going on in the market. So starting on the monthly chart, we have a bullish fair value gap here. And what do I see? I see the previous month's chart basically tapped into this bullish fair value gap, and we got a reaction from just about the equilibrium or the CE of this monthly gap. I graded this gap out to see we are in the upper quadrant here, as you can see. So we're in the upper quadrant of this gap from the EQ. So there is no reason at all to short. If you are shorting inside of this, you are basically asking to throw money away. Scrolling down here to the weekly chart, you can see we have a weekly AMD. Now, what is AMD? AMD is accumulation, manipulation, distribution, as you can see here. When price accumulates within a range, manipulates one side, it distributes to the other side. So here, looking at the weekly chart, we have an accumulation. Now, I like to use the candle bodies. Accumulation here for a couple weeks, manipulation here for 3 weeks, and now I'm expecting distribution. So like I said, I am not bearish at all. Here, what do we have? We have a weekly swing low. So there's a lot of sell side liquidity resting below here. We also inside of a monthly bullish fair value gap, and we're almost in the EQ of the whole range from the swing high. You can't see it in this image, but to the swing low. So here, there is no reason at all to be getting short, like I said. Now, this is why the daily time frame is important, because you need to pay attention to the PD raise. We have a daily bearish fair value gap. If market open would have manipulated into this daily bearish fair value gap first, you don't want to long into that. But what do? Market open manipulated lower first, and then I got long. So on the daily time frame, I'm looking for important PD raise that could stop or discourage me from taking a trade. So here, this daily bearish fair value gap is what I'm looking to see if this is going to tell me, hey, do not take a trade, or if we can target it for you. I'm on the 4-hour chart, and what am I looking at? Is there anything on the 4-hour chart down below us we can target, or down below us that can support us? If I'm looking at the 4-hour chart, we have a new week opening gap. New week opening gap is fully filled. So now I can look at that, eliminate that. We don't need to fill the new week opening gap. I can see us going higher. Now I'm tabbing down to the 1-hour chart, and what am I looking at? I'm looking at my session highs and lows, my previous day highs and lows, and I'm also looking at midnight opening price. So session highs and lows. Are there any lows still untaken? Asia low already taken. London low already taken. So there are no significant lows to target in a reasonable range. Now I look above us. London high, untaken. Midnight, untaken. Previous day high, untaken. So we have clear draws on liquidity up above us. And what's above us? This daily bearish fair value gap. So now I can see we can target this daily bearish fair value gap, because why? It is not pushing us down lower until we tap into it, and it is unmitigated. So we have draws on liquidity leading up towards this daily bearish fair value gap. Now let's get into the actual charts and the real execution. So here you can see this is 9:30 opening price. And what happens at 9:30? 9:30 immediately manipulates lower and does what? We have some 1-hour sell side here. We go and we take out that 1-hour sell side with displacement. Now, I like to see sell side or buy side get taken out with a fair value gap. If there isn't a fair value gap, it really depends on the price action. Maybe I want to see a remanipulation or something, but I like to see this right here. Here, we took out this sell side with displacement, showing there was intent to manipulate low. Now, what am I looking for? I'm not shorting the market today. I am only looking for longs. So this right here does not convince me we are going to be bearish. Here, what do? The order flow switches. we had a bearish fair value gap. This should support us lower. Instead, we inverse this fair value gap and we go higher. So that is what I call a order flow switch. And now I'm expecting order flow to be bullish, meaning bullish PD raise to support us higher. Now, a lot of people on Monday probably took this right here, the inverse here, targeting this, and they probably got stopped out break even because, as you can see, price action came back down to the break even here. Now, I'll tell you why I faded that and why I waited on a retracement. So if you know the ICT 2022 model, you know after there's a market structure shift, you need a retracement back into a PD array to support price higher. Here, we have a market structure shift on the same candle you would have entered off of the inverse. So I'm not taking this here because we've already had a market structure shift and price needs to retrace back into something to continue higher. So I set my limit order here at the CE of our first presented fair value gap. And now what is a first presented fair value gap? First presented fair value gap is the first PD array presented after 9:30 opening price. So here, this one is not our first presented fair value gap because you have to use a candle before 9:30 opening. Here we do have a technical first presented fair value gap, but why don't I use this one? It's the same reason like I mentioned before. I like to see my fair value gaps do something important. This fair value gap here did what? Took out our 9:30 opening wick high, which there's a lot of liquidity behind there. You know, people are shorting right at open, hoping that we go down. So there's a lot of liquidity going out. And what do we have? A fair value gap displacing through that liquidity. So this is my first presented fair value gap that I am going to use. Here, I put my limit order at the CE of the first presented fair value gap, and I targeted this 1 hour buy side liquidity here. All right. So we basically put our limit order at the CE of this first presented fair value gap, expecting this lower gap here to stay open and be a breakaway gap, which it did. And I targeted this 1 hour buy side here. And I also targeted our previous day high, but I got trailed out somewhere around here. So that's the trade explained briefly, but let me explain the model. The model is something I call the expansion retracement model. And I trade something called liquidity hunting, and I use 4 phases of algorithmic price delivery to trade towards the drawing liquidity at all times. I don't trade anything else. Whether you see me trade a IFVG, a retracement, an expansion, a consolidation, I am trading one of the 4 stages of algorithmic price delivery. And if you don't know them, check out my website. My website has a full course over every single stage. So here we have the expansion retracement model. And just explain briefly, expansion retracement model is when we expand, we have our dealing range from the high to the low. We draw out our dealing range and we need an entry below the equilibrium of the range. So we want to be like smart money. Smart money is not buying in the premium. So you got plenty of people who are buying up here in the premium. Smart money is waiting down here in the discount to buy. Smart money wants to buy when price is cheap. So that is what the expansion, the retracement gets aligned with smart money. And I want to be smart money, not dumb money. So I'm getting aligned down here in the discount to target a new higher high, which is what we got here. So just briefly, expansion, retracement to the EQ to seek another expansion. And that's what every single expansion should do. Every single expansion that retraces should expand again towards the drawing liquidity. Okay, so that's it, plain and simple, one trade done. Going into Tuesday did nothing but displace higher from open. So if you traded this, you more than likely gambled and guessed just long anywhere in the market. Maybe you had something you saw that you liked, but there was no manipulation here at open. We literally just displaced higher immediately from open, so I took no trade. Alrighty, so going into Wednesday was the day I took a loss because my bias was wrong. And like I said numerous times in numerous videos, I'm the most transparent trader on the platform. I'm not going to hide any losses for you, and I'm not going to blame the market condition. I took this loss because my bias was incorrect. But looking at this here, I did not take a bad trade. My bias was just wrong. So the trade I took Wednesday, we swept out some 1 hour sell side. We had a 1 minute manipulation here. You can see we got a very long dramatic wick, and then we got displacement up above giving us a bullish fair value gap. We have some low resistance here to target, so I thought we were at least going to rebalance a little bit at lunch, but as you can see, we didn't do that, and I held this trade for a pretty long time, and we ended up getting stopped out in about 30 minutes or so. But it was a very small loss compared to the win we took on Monday. Now, I don't have Wednesday drawn out, but I can tell you for certain, if you go chart this out yourself, on Wednesday, we had 2 more draws on liquidity up above us. I have 3 drawn out right here because we took out 1 and we left 2 up here above us. Now, my bias was wrong this day. I was expecting to see us take out these draws on liquidity up here, and let me tell you exactly why we did not have to do that. So we did tap into a daily bearish fair value gap, if I'm not mistaken. And we tapped into that daily bearish fair value gap. And then what happened? We got displacement lower, a retracement. Use this right here as a rejection block from another rejection block that was formed off of this wick here. So we had a rejection block here. And what did I talk about earlier? Order flow switch. Here, what do we have? A bullish fair value gap. We inverse that, order flow switching. Here, what do we have? A bullish order block. We disrespected that, the order flow switching. Here, what do we have? A bearish order block. And we did respect that. As you can see here, we tapped it and started to displace lower. We did climb back pretty deep into it, but we never invalidated it because we never got above this wick here. We displaced lower. Then what do we start doing? Expanding. I'm going to draw one of these out for you. This is literally everything I trade. We expanded lower. We retrace to what? The first PD rate in the premium. Why am I not using the discount in this area? Because we are bearish. We're not bullish. So this is the first PD rate in the premium here above the EQ. So here we expanded lower. What do I want to see on these expansions? Bearish fair value gaps. Bearish fair value gap. Bearish fair value gap. Expanded lower. On this run higher, are we getting bullish fair value gaps? This is going to tell me, am I trading in the right direction? No bullish fair value gap. So I should have paid attention to that and I should have noticed that. Here we tap into this fair value gap right here. Respect to the CE, what do we get? Another expansion lower. Then if you come use your same exact tool, and this is why I love my model, it's very simple. Use your same exact tool, what do we get? Another expansion lower. Do we have bearish fair value gaps? Yes. Then what do we get? A retracement to the first fair value gap in the premium, then another expansion lower, and we keep grinding on lower. So Wednesday was a more difficult day. If you took a loss on Wednesday, do not beat yourself up. This was a hard day to trade. This was a very difficult day to trade. As you can see, this is very choppy price action. There is no clear direction if you're just looking at it, but if you're using sound logic and sound reason, there is a way to decipher which way the market is moving in. Alrighty, so on August 6th, there was a banger trade play out. This was probably the best trade I've seen in maybe a month or two, but let's get into it quickly. So here we had basically an inversion of our first presented fair value gap, which I told you about in the last video, inversion of that first presented fair value gap. Here, as you can see, I enter my longs and we're basically targeting our Asia session highs, which the indicator printed out for me, London session highs, 1 hour buy side, and we got a CISD eventually. So it was a A+ trade, probably the most perfect trade of the week. Now, this is exactly how you could have caught this trade. Now, this trade didn't play out exactly how I thought it would, but this is why you need to have a bias going into the session, because if you don't, you're going to flip your bias in this case here. So going into the day, on the daily chart, I'm not doing the monthly again because the monthly does not change that often. If the monthly is bullish on Monday, it's going to be bullish on Wednesday, Thursday, Friday. So here, going into the daily chart, where are we? We're inside of a daily bullish fair value gap. So what am I saying to myself? There are absolutely zero shorts from this area. I should not short. If I short from this area, you need to take about a month or so off trading and start backtesting, studying, and paper trading. What do we have over here to the left? Always look left. Low resistance liquidity. This is an easy target for the NASDAQ to start taking out. So we're inside of a bullish fair value gap, and we have low resistance liquidity right here to the left. So where should we be going? Higher. What do we have here? Again, a potential AMD. What do we have? Accumulation, manipulation. What am I expecting? Distribution higher. Same exact thing every single day. And what did I also put? We could see a little lower to the EQ of the range. Make sure you remember that as we get into this trade. I'm going down to the 1 hour chart. What do I see? I told you I do this every single day. Here, where are my session highs and lows, and are they taken out? Asia low, taken out. London low, taken out. London high, still available. Asia high, still available. Previous day high, still available. And we're below midnight. So the same exact thing I talked about on Monday applies for Thursday. And as you can see here, this is a very simple way to get your buy. Perfect example of why I faded the trade on Monday. So looking at this trade, what do we have? At open, market open is right here. We got a displacement down into the daily bullish CE, which is the consequent encroachment of that daily bullish fair value gap. What did I say I like to see? Fair value gaps to show there was intent. We got bearish fair value gaps here. What do? Once we wick that daily bullish CE, we get an immediate displacement higher. Now, Why did I say I did not take that trade on Monday? Because we'd already gotten the market structure shift. So let's say that you took this trade, you were using this, and this candle was the one that inverted this gap. Look at exactly what happened, exactly what I said about Monday. We retraced back into this bullish fair value gap. And what would you have doing? Either taking drawdown or maybe even gotten stopped out of this trade. And you would have been nervous, you would have been shaken, and this right here would have damaged your mentality. So I got in here because why? We have not gotten the market structure shift yet. So I do not have to worry about a retracement going against me in this situation. Here, I took my longs once we inverse the first presented fair value gap. And if you don't know, first presented fair value gap is my favorite PD array ever invented. If we're above this PD array, we're more than likely going to be longing. If we're below it, you're more likely going to be shorting. It's just that simple. It is a little deeper than that, but that's just to keep it simple for the video. So here we inverse that first presented fair value gap immediately once I saw this. Too high probability for me not to long. Zoom out, look left. What do we see? Low resistance. Clean target. And this was very, very clean delivery. I think I took my first trim somewhere around here. I think I got trailed out around here. I had my stop loss in a little bit of the wrong place. But this was a beautiful, beautiful trade. I called it out live. I captured 155 points. You could have taken this higher. You could have taken this all the way to up here. I think we had a previous day high or something around here. You could have taken this too. This is a very, very, very clean trade. And it's a very simple model here. This is the fourth stage of algorithmic price delivery. A lot of people call this IFVG, but keep it simple. It's just a reversal. That's all this is. As you can see here, we're trending lower, trending lower, trending lower, trending lower. Now, what am I looking for? Market only moves in 4 stages, being expansion, retracement, consolidation, and reversal. Here's a point we can reverse for. So what am I looking for? I'm looking for a reversal. So here we reverse. So I'm looking to get a line and target. Alrighty, so August 7, we finished the week off strong and caught an absolute bottom tick. As you can see here on the NASDAQ, we bottom ticked this here off the CISD, off the indicator, and basically got out almost a perfect entry here right at the top. This did end up displacing higher, but we got a lot of drawdown. I didn't want to sit through that, so I ended up getting out because we had S&T with the ES. Now, going into the day, August 7th, what am I looking at? I'm back at the monthly chart on Friday because of what? Because remember on Monday, we were all the way down here on the monthly chart. What has the weekly profile done? Displaced higher. So I'm seeing the weekly profile has displaced higher. What do I need to do? Continue to get aligned with the profile, which is bullish. I do not need to short. We're being bullish from a monthly bullish fair value gap. I do not need to be shorting until shown otherwise. Looking here at the 1 week candle, what has the weekly candle done? Absolutely ripped from this monthly bullish fair value gap. Like I said, no reason at all to shorts. That daily bullish fair value gap we had yesterday, what do we have? We're displacing away from that daily bearish fair value gap, daily bullish fair value gap, I apologize. And we have equal highs right here. So what am I targeting? These equal highs as buy side liquidity. No reason at all to short again. 4 hour, what am I looking for? An inverse of this 4 hour bearish fair value gap. Now, this did not play out how I expected. I expected the NASDAQ to straight up rip open at open. Because when I took this image, the NASDAQ was already above this 4 hour gap. So I was expecting to see just straight continuation at open. It didn't play out that way, but this is why you need your bias, because it will flip if you do not have one. Alrighty, so now I am going to the 1 hour chart, and this is where you need to have some advanced concepts. What do I see here? On the 1 hour chart, my London session high taken out, Asia session high taken out, and previous day high taken out. The only thing open is midnight and our London session lows. So using what I've been showing you throughout the rest of the video, you would want to assume we are going to be bearish. But this is the 1 hour chart. Remember, this is only 1 day of price action. So more days than not, this is going to be right. As you see, this week, 2 days, it led you right, and 1 day it was wrong. But remember what we looked at. I'm scrolling here. Monthly time frame, extremely bullish. Weekly time frame, extremely bullish. Daily time frame, extremely bullish. 4 hour time frame, extremely bullish. So even though the 1 hour has draws down below us, that is not reasonable for us to be bearish if every single higher time frame is extremely bullish, not slightly bullish, not moderate, can go both ways. They are all extremely bullish. And that's really where discretion comes into play. You have to develop your own discretion. You have to stop following one step, two step, three step, and thinking you're going to make it that way. You have to be able to differentiate and get intimate with the market and actually learn what's going on. What do I need to recognize? What does the NASDAQ typically do so you can be consistent in the market? But already getting straight into this trade here. So getting straight into this trade, you could have gotten a better feel than me. Here we had an IFVG here, which we had a bearish 1 minute fair value gap displacing through these data lows. Data lows are from the 8:30 news. We had non-farm or something come out this morning at 8:30. Data lows here. That's an obvious draw on liquidity. That's an obvious draw on liquidity. That's almost going to always be taken out. So data lows down here. We inverse this fair value gap off of that. You could have gotten in there. Now, I didn't inverse there because I wanted to see a little bit more to get some confirmation because we were trending down lower. And like I said, I was expecting us to be straight bullish at open. So here we got our what? Market structure shift, CISD. Like I've said for the third time in this video, what comes after market structure shift? Retracement into the first fair value gap. What do we have here? The first fair value gap here. Now, we were fortunate and we limit ordered the CISD and we bottom ticked this to just about the tick. I exited early because we did have a SMT here with the ES, so I exited early, but we bottom ticked this, retracement back into this first fair value gap, and boom, clean displacement up higher. I think I took one off around here because of SMT with the ES here, and I think I actually took full TP off around here because we had SMT with the highs here. So pretty clean trade, very easy. Very easy week, and make sure you study this video. I know everybody wants the thrill of trading. Everybody wants the thrill of making money. But if you're not putting in the work and you're not actually studying, it's going to be almost impossible for you to become consistently profitable because you're just chasing dopamine rushes. And that's the full trading recap there. As you can see, we took one loss last week. Every other trade was a great win. As you can see here, pretty great win, zero drawdown on about 2 trades we took. One trade did get a little bit of drawdown, but ended up running for about 150 points. So, you know, every trade can't be perfect, but it's trusting your model and trusting your process. So, all right, so that sums up my weekly recap. Those are all the trades I took, what I think are the highest probability trades you could have taken. And leave a like, leave a comment, share this video. Save this video so that you can come back to it and continue to study and reference this video. Trading and YouTube videos are not one-time, one-and-done things. You should use these YouTube videos more than one time, whether that be my video, someone else's video, or any of the information you have. But if you did gain something from that video, check out my website, araxishq.com, and there are a plethora of resources here. Here we have full free courses, and there are plenty more courses coming soon. There are no assignments here yet, but there will be plenty of assignments. We have the Trading Hub where I basically post every day's bias, what I think is going to happen. I'm also rolling out some other things. We got some mindset things so you can work on your psychology. If you have something, Stop Trading Alone, give this a read. This is a really, really, really good read. This is basically about my own story of depending on my own strength instead of God's inside of my trading. So make sure you give this a read, give this video a watch. Go back here. Go back to the dashboard. Then we have our trade recaps. Everything that I basically take, all my trades are documented here. Then we have a couple partners I'm partnering with. We got Top 1 Futures. We got TradingView. We got a journaling platform named Ultra. Ultra may be coming off of here soon, but there will be a lot more updates on here, and it's 100% free. So at least you can do create an account, use this to your own ability. Everything here is free. There is no credit card required. All you have to do is literally create an account. That's all you have to do. You scroll on the homepage, it'll show you a couple things, free classes and things like that. Create you an account, use this to study, and there you go. That's everything you need. This is going to give you the foundation to start taking consistent payouts. So thank you guys for watching. I'll see you guys in the next video. Deuces.